Hi audience, my name is Borala Rajeswar. My designation is Associate Professor in MBA department in Marri Laxman Reddy Institute of Technology and Management. Subject name is Security Analysis and Portfolio Management. Today's my topic name is Introduction to SAPM, Security Analysis and Portfolio Management. The Security Analysis and Portfolio Management course objectives are as follows. The first one is the investment alternatives. The second one is the valuation of debt and equities. The course outcomes to know the investors knows about the Indian environment, to know about the portfolio analysis, to know about the bond valuation and management, to know about the equity valuation of cash market and derivatives, to know about the performance of the portfolios. These all are the outcomes from this subject if we learn. Next, the first unit giving to us the information in Indian investment environment in Indian overview, Indian financial system, security trading in stock markets, investment alternatives, the investment process, security analysis. This security analysis divided into various types. The first one is known as a fundamental analysis, technical analysis, and the last one is the efficiency market hypothesis. These all are the types of topics it has included in our first unit. The following books are covering the above topic. The following resources also covering the above topic. Next, the Indian investment environment in India. Investment means every investor will be expecting the return on his investment. This investment will be, we are getting very more, the risk will be very less. The investment opportunities in India has divided into various types. They are as follows. The first one is the stocks, bonds, mutual funds. Next, the scrips, etc. These all are the categories of investments divided in Indian capital market. Next, the overview of Indian financial system. The elements of Indian financial system consist of three types. The first one is the financial markets. The second one is the financial instruments. The third one is the financial intermediaries. What is called financial markets? These markets are providing to opportunities exchanging the investments from one person to other persons. These markets we can divide it into two types. One is the money market and the second one is the capital market. Money market is nothing but the providing the short-term financial needs fulfilling in the society. Capital market also one of the market. This is also fulfilling the long-term financial needs in the society. These all are the types of markets divided in India. The next one is the financial instruments. These financial instruments will be providing exchanging services among the buyer and sellers. These financial instruments are divided into bonds, securities, fixed deposits, commercial papers, etc. These all are the types of instruments utilizing and in the financial markets. Next one is the financial intermediaries. These financial intermediaries providing the financial services in the country. They are the banks. These banks divided again into various types of public banks, private banks, as well as non-financial banking services. These all are the types of banking services utilized in our Indian financial system. These financial institutions providing the financial services to the public. These all are the types of elements it has included in Indian financial system. Next one is the investment management process. This investment management process has divided into four types. The first one is the investment policy. The second one is the investment analysis. The third one is the investment valuation. The fourth one is the construction of the portfolios. These all are the types of investment processes it has included in the investment process. The first one is the investment policy. What is called investment policy? Investment policy giving to us information about the knowing about the objectives, knowing about the knowledge, knowing about the investable funds in the market. This is the one of the important process it has included investment management process. The second one is the investment analysis. Before going to investing the investment, every investor we need to evaluate the different types of analyses. These analyses we can divide it into again various types. That is the economic analysis. The next one is the industrial analysis. The third one is the company analysis. The last one is the technical analysis. These all are the types of analysis. It has included investment analysis. The investment analysis divided into 4 types. Economic analysis. Economic analysis telling to us about the countries level factors. Which country is favorable for our investment? Every investor will be, before going to investing the investment, evaluating about the country level factors. That country level factor giving to us the favorable information, we can select that country is a favorable for our investment. The next one is the industrial analysis. Which industry giving more benefits comparing with the so many in the market, so many industries existing. In that industry, some industries giving to us the more returns, some industries will be giving the less industries. Every investor will be expecting the best industries in the country. This best industries giving to us the more returns to the investors. The next one is the companies. After completed the industrial analysis, the investor will be evaluating about the next analysis is known as we can call the company. Which are the companies giving in the more profits in the industry? We need to evaluate about the companies. After completed the company analysis, we need to analyze the technical analysis. This technical analysis will be giving trends about the market in the capital in the markets. These all are the types of analyses we need to complete before going to investing the investments process. The next one is the investment evaluation. The investor has the various types of calculations. These calculations will be giving to us the results about the investments. These calculations divided into various types. That is known as a bond valuation is also one of the calculations. This bond valuation also using before going to investing the investments in the bond valuation. These bond valuation results will be changing from one company bond with the other companies. Based on the results, we need to select the different types of companies bonds for the investments. Next one is the equity valuation is also one of the type in the investment valuation. Like this, we have the various types of valuations included in the investment valuation. After completed the above 3 types of valuations, finally we can construct a portfolios. This portfolio is group of investments selected and evaluated. This group of investments giving to us the more returns and less risks to us. These are all the types of investment processes included before going to investing the investments in the markets. Next one is the investment alternatives. What are the types of investment alternatives available in the market? The investment alternatives divided into various types. They are as follows. One is the stocks, shares, bonds, scrips, gold, real estate, etc. These all are the types of investment alternatives available in the market. Next, the objectives of the investment. Every investment expecting the following types of objectives. One is the safety, the second one is the growth, the third one is the income, the fourth one is the risk, the fifth one is the return, the sixth one is the tax exemption, last one is the liquidity. These all are the types of objectives included before going to investing the investment. The first objective is the safety. Every investor will be expecting the safety for his investment. This safety will be giving to us the security for our return as well as our total investment amount. This is also one of the important object included in the investment objectives. Next one is the growth. Every investor will be expecting the company's development. This company's development will be very more. The returns also very more. The investment also it has included the guarantee. Every investor will be expecting the growth. This growth will be different from one company with the other companies. This is also one of the important objective. Next one is the income. Every investor will be expecting on his investment regular income. This income will be very more. The investor will be getting the more returns. The income will be very less. The investor will be getting the less income. This is also one of the important object it has included. Next one is the risk. The risk also changing from one investment with the other investment. The risk will be very less. The return will be very more. The return will be very more. The risk will be very less. Risk is nothing but uncertainty of losses can be occurred. This is one of the important object it has included in the investment objectives. Next one is the return. Every investor will be expecting the return. Return is a reward to the investment. If the return will be very more, the investor will be getting the more income. This is also one of the important object it has included. Next, the next object is the tax. The tax will be very more, returns will be very less. The tax will be very less, the returns also very more. The tax also deciding determinant for the investor's return. This is also one of the important objective it has included. The next one is the liquidity. Liquidity means a conversion of assets into money. The is known as we can call the liquidity. This is also included one of the objective in the investment. Thank you very much for watching my videos. Thank you very much.